Welcome back to the Gold IRA Blueprint podcast. Today, today we're diving into something that's been generating a lot of buzz lately, gold IRAs. You know those retirement accounts where you can hold actual gold instead of just stocks and bonds?
Yeah, definitely a hot topic right now.
We're going to unpack all of that, explore why it's particularly relevant for American retirees like you, and sift through some articles and research we found on the topic.
It's a fascinating area, especially now with so much talk about inflation and market volatility. People are looking for ways to protect their savings. And gold has always had this reputation as a safe haven.
Right, and this Gold IRA Blueprint website we've got here claims they can help you navigate this whole world, even offering a free checklist to help choose the right Gold IRA company. You can grab that at goldirablueprint.com/exclusive if you're interested. But before we get ahead of ourselves, let's back up and make sure we're all on the same page. What exactly a Gold IRA, and how does it differ from the traditional IRAs we're all familiar with?
Good point. It's important to start with the fundamentals. A gold IRA is a self-directed individual retirement account, just like a traditional IRA. But instead of holding paper assets like stocks or bonds, it allows you to invest in physical precious metals. Think gold coins, gold bars, tangible assets you can hold in your hand.
Okay, so it's like having a treasure chest as part of your retirement plan.
Mhm.
But I'm guessing it's not as simple as just buying some gold coins and stashing them under your mattress, right?
Definitely not. These gold IRAs are regulated by the IRS, which means they come with specific rules and regulations. Your gold needs to be stored in an IRS-approved depository. And there are guidelines about the types of gold you can purchase.
So it's not a free-for-all. There's structure and oversight to ensure everything's above board. But why would someone choose a gold IRA over a traditional IRA in the first place? What are the advantages?
Well, one of the biggest draws is diversification. You've probably heard the saying, don't put all your eggs in one basket. That's especially true when it comes to retirement planning. A traditional IRA, heavily focused on stocks and bonds, can be vulnerable to market fluctuations.
Right, as the stock market takes a nosedive, your retirement savings could take a hit. So a gold IRA is like having a backup plan, a way to spread the risk.
Exactly. Gold historically has a low correlation to the stock market, meaning its price tends to move independently. So when stocks are down, gold might hold its value or even go up, providing a buffer for your portfolio. Imagine it as having a life raft if your main ship starts taking on water.
That's a great analogy. So gold IRAs offer diversification. Anything else?
Another key benefit, and one that resonates with a lot of people right now, is protection against inflation. You see, when inflation rises, the purchasing power of your money decreases. What you could buy with $100 a few years ago won't get you as much today. Gold, however, has historically held its value during inflationary periods, sometimes even increasing in value.
So it's like a shield against the erosion of your savings caused by inflation.
Precisely. And this is particularly relevant for retirees living on a fixed income. As prices rise, their buying power diminishes. But if a portion of their savings is in gold, it can help offset that decline.
This is fascinating. I never realized the connection between gold and inflation before. Are there any historical examples that illustrate this point?
Absolutely. Take the 1970s, for example. The U.S. experienced a period of high inflation. While the stock market struggled, gold prices soared, acting as a safe haven for investors seeking to preserve their wealth. And even in more recent times during the 2008 financial crisis, when many assets plummeted, gold held its ground, demonstrating its resilience in uncertain economic climate.
Okay, so we've got diversification and inflation protection as potential benefits. The Gold IRA Blueprint website also mentions gold being a safe haven asset. What exactly does that mean?
A safe haven asset is an investment that tends to hold its value, or even appreciate during periods of economic or political turmoil. Think of it like a shelter when the storm hits. When investors get nervous, they often flock to safe havens like gold, seeking stability and security.
But isn't gold notoriously volatile? How can it be considered a safe haven if its price jumps around?
That's a great question, and it highlights the nuance here. While gold can experience short-term price fluctuations, it tends to hold its value over the long term, especially when compared to more volatile assets like stocks. It's about that long-term resilience.
So it's about looking beyond the daily ups and downs and
Yeah.
focusing on gold's historical track record as a store of value during times of uncertainty.
Exactly, and that historical track record goes way back. For centuries, gold has been recognized as a valuable commodity, used as a form of currency and a symbol of wealth. That enduring appeal contributes to its safe haven status.
Okay, so we've covered some compelling reasons why someone might consider a gold IRA. But how does this actually work? If you're ready to take the plunge, what are the steps involved in setting one up?
The process is actually quite straightforward. It starts with choosing a custodian. A custodian is a financial institution that holds and administers your gold IRA, ensuring everything complies with IRS regulations.
So you're not managing this on your own. You need a trusted partner to handle the administrative side of things.
Yeah.
But with so many custodians out there, how do you choose the right one? What are some key factors to consider?
Excellent question. You'll want to look for a custodian with experience and expertise in gold IRAs. They should have a proven track record, strong financial standing, and excellent customer service. You're entrusting them with a significant portion of your retirement savings, so it's crucial to choose wisely.
Makes sense. It's like choosing a surgeon. You want someone with a steady hand and a history of successful outcomes. And remember, that free checklist at goldearablueprint.com, festive exclusive, can be a helpful guide in navigating this process.
Absolutely. Once you've chosen your custodian, the next step is to open your gold IRA account. This involves filling out some paperwork and providing the necessary identification documents.
Okay, so similar to opening any other type of financial account, what happens after that?
The next step is funding your gold IRA. You can do this in a couple of ways. You can transfer funds from an existing retirement account, like a traditional IRA or a 401k, or you can make direct contributions.
So it's flexible in terms of funding. You can move money around without penalty or contribute directly, but I'm guessing there are contribution limits just like with traditional IRAs.
You're right. There are annual contribution limits set by the IRS. It's important to stay within those limits to avoid any penalties.
Okay, so you've chosen your custodian, opened your account, and funded it. What's the final step in setting up your gold IRA?
The final step is purchasing the gold that will be held in your IRA. And this is where it gets really interesting. You'll work with your custodian to choose from a selection of IRS-approved gold products, which can include gold bullion bars, gold coins, and even gold ETFs.
Hold on, gold ETFs. I thought this was about holding physical gold.
You're right, the core concept of a gold IRA is holding physical gold. However, some custodians offer the option of including gold ETFs in your portfolio. These are exchange-traded funds that track the price of gold, giving you exposure to the gold market without physically holding the metal.
So it's like having a hybrid approach, combining physical gold with a more liquid investment option. What are the pros and cons of each?
Well, with physical gold, you have that tangible asset, that sense of security that comes with owning something you can hold in your hand. It's also a direct investment in gold, with no management fees or intermediary involved.
But what about those storage fees we mentioned earlier? Doesn't that eat into your returns?
It can. With physical gold, you're responsible for storage costs at an IRS-approved depository. These facilities provide secure, climate-controlled environments to protect your investment.
So there's a trade-off there. The peace of mind of holding physical gold comes with the added cost of storage.
Exactly. Now, with gold ETFs, you avoid the hassle and cost of storage. They're also more liquid, meaning you can easily buy and sell them on the stock market.
That sounds appealing. But are there any downsides to gold ETFs?
There are a couple of things to consider. First, you're not directly holding gold with an ETF. You're buying shares of a fund that invests in gold. So there's an extra layer of complexity. Second, ETFs come with management fees, which can cut into your returns.
So it's important to weigh the pros and cons of each approach and choose the option that best aligns with your investment goals and risk tolerance.
Absolutely. And your custodian can help you navigate these choices and make informed decisions.
Okay, this is all starting to make sense. You've got your traditional IRAs with stocks and bonds, and then you've got these gold IRAs where you can diversify with physical gold, potentially hedging against inflation and market volatility. But it occurs to me that there's a whole other category we haven't even touched on yet. Gold mining stocks. Where do those fit into the picture?
That's a great point. Gold mining stocks are another way to gain exposure to the gold market, though they work a bit differently than directly owning gold. Instead of investing in the metal itself, you're investing in the companies that mine and produce gold.
So it's like betting on the success of those companies, rather than on the price of gold itself. What are the potential advantages of that approach?
Well, one potential advantage is leverage. If the price of gold goes up, the profits of gold mining companies could increase significantly, potentially leading to larger gains for their shareholders.
So you could see higher returns compared to just holding physical gold.
That's the idea. But of course, with higher potential rewards comes higher risk. Gold mining stocks can be much more volatile than the price of gold itself. They're influenced not only by gold prices, but also by factors like operational costs, geopolitical risks, and environmental regulations.
So it's a more speculative investment, one that requires careful research and a higher risk tolerance.
Exactly. It's not for everyone, and it's certainly not something to jump into without a thorough understanding of the risks involved.
Okay, so we've got these three main ways to invest in gold within a retirement account. Physical gold, gold ETFs, and gold mining stocks. It sounds like there's no one-size-fits-all answer, and the best approach depends on your individual circumstances and investment goals.
You're absolutely right. There are trade-offs to consider with each option. Physical gold offers that tangibility and direct ownership, but it comes with storage costs and liquidity challenges. Gold ETFs provide convenience and liquidity, but you don't physically hold the metal, and there are management fees involved. And gold mining stocks offer potential for higher returns, but also carry higher risk.
It's a lot to weigh. It sounds like working with a knowledgeable custodian is crucial in navigating these choices and making informed decisions. And speaking of custodians, let's dive a bit deeper into their role and how they impact the whole gold IRA experience.
Absolutely. As we mentioned earlier, the custodian is your trusted partner in this process. They're the ones who hold your gold, administer your account, and ensure everything complies with IRS regulations. Choosing the right custodian is one of the most important decisions you'll make when setting up a gold IRA.
But with so many options out there, it can feel overwhelming. What are some key questions you should ask potential custodians to help you make an informed decision?
I'm glad you asked. First, inquire about their experience and expertise in gold IRAs. How long have they been in business? What's their track record? Do they have a team of specialists who understand the nuances of precious metals investing?
So you're looking for a custodian with a proven history and specialized knowledge. What else should you consider?
Fees are another crucial factor. Custodians typically charge a variety of fees, including setup fees, annual maintenance fees, storage fees, and transaction fees. It's important to understand their fee structure and compare it to other custodians to ensure you're getting a competitive deal.
Right? Those fees can eat into your return, so it pays to shop around. What about the storage options they offer? Is that something you should discuss with potential custodians?
Absolutely. As we've discussed, physical gold needs to be stored in an IRS-approved depository. Your custodian will typically partner with one or more depositories to provide storage solutions for their clients. Inquire about the depositories they work with, their security measures, their insurance coverage, and their track record.
So it's not just about choosing a custodian. You're also indirectly choosing a depository for your gold. What other questions should you ask potential custodians?
It's a good idea to inquire about their customer service and support. How responsive are they to inquiries? Do they have a dedicated team to assist gold IRA clients? What are their communication channels? You're entering into a long-term relationship with your custodian, so you want to ensure they provide excellent service and support.
That's so important. You need a custodian you can trust and rely on. And remember that free checklist at goldlirablueprint.com for exclusive can be a valuable tool in helping you evaluate potential custodians. And ask the right questions. It's packed with helpful tips to guide you through the process.
It's an excellent resource. Don't hesitate to leverage it. Now let's shift gears a bit and talk about a topic that often causes confusion and concern for those considering a gold IRA: taxes. How are these accounts taxed, both in terms of contributions and withdrawals?
Okay, let's unpack the tax implications. This is an area where people can get tripped up.
You're right. The tax treatment of gold IRAs is similar to that of traditional IRAs. Contributions are typically made pre-tax, meaning they can potentially reduce your taxable income in the year you make them.
So you could potentially lower your tax bill in the present, which is a nice perk. But what about when you start taking withdrawals during retirement?
Withdrawals from a gold IRA are generally taxed as ordinary income. This means you'll pay taxes on those withdrawals, based on your income tax bracket at the time.
So it's important to factor that into your retirement income planning.